Let's start with a simple question. Why is the world glued to the Strait of Hormuz? If you look at the map, you see a narrow waterway connecting the Persian Gulf to the Sea of Oman. But this narrow waterway carries 20% of the world's oil consumption. The annual energy trade through here is worth over $500 billion. Now, imagine Iran testing a new missile called the Sayyad 3G at this critical choke point. Any tension here directly impacts everyone's wallet. When did this missile test happen? Right when Trump had given Iran a 10 to 15-day ultimatum. Let's look at the numbers. The U.S. defense budget for 2026 is approximately $961.6 billion. In contrast, Iran's defense budget, calculated at an exchange rate of 130,000 tomans per dollar, is estimated at about $9.23 billion. This means U.S. military purchasing power is over 100 times that of Iran. This huge disparity is also reflected in Congress just allocating an extra $2.1 billion for munitions production. Here's the question. Why would Iran do this with such a power disparity? The answer lies in its economy. To sell oil, Iran must offer heavy discounts to China and use a shadow fleet of tankers. These sanctions-busting methods mean Iran only receives 2/3 of the actual oil price. For every $100 of oil, only $66 reaches the treasury. On the other side, the U.S. isn't sitting idle. 2 aircraft carriers and numerous stealth fighters have been sent to the region. This is the largest military buildup in 2 decades. But let's look at the interesting part of the U.S. defense budget. Congress allocated $650 million to increase solid rocket motor production and an extra $2.1 billion for munitions production. This money comes from American taxpayers. The corvette that launched the missile is a Shahed Soleimani class. These fast vessels are designed for the shallow waters of the Persian Gulf, where massive U.S. warships struggled to maneuver. This is asymmetric warfare. Iran, with its limited budget, is trying to strike at the most sensitive point, the Strait of Hormuz, where the global economy breathes. This 93-mile bubble that Iran talks about, what does it mean? It means that if tensions escalate into conflict, the U.S. couldn't easily approach nearby waters. This directly impacts oil prices. U.S. gas prices have reached $2.91 per gallon, about 11 cents higher than last month. It might seem small, but for millions of American families, it means billions in extra costs. These drills weren't just about showing power, they had an economic message. Asian countries like China, India, Japan, and South Korea buy 69% of all oil passing through this strait. China alone buys about 90% of Iran's exported oil. If this artery closes, these countries' energy supply chains would be disrupted. These corvettes symbolize an economic military strategy. Iran, with its limited budget, is trying to strike at the most sensitive point, the Strait of Hormuz, where the global economy breathes. This distrust is also visible in Iran's trade with the world. A member of Iran's Chamber of Commerce says that even in neighboring countries like Iraq and Afghanistan, companies working with Europe or the U.S. won't cooperate with Iran. This means Iran is trapped on an economic island. Sadr al-Din Niavarani of the Iran Chamber of Commerce says, in deals with China, tariff reductions usually apply to goods Iran doesn't export. The agreement with Eurasia gives benefits for almost nothing. Most of these agreements are more symbolic than practical. Amid all this, contradictory news comes from the talks, but the important point is that Iran's trade deals with China and Eurasia are more symbolic than practical. A businessman says, in deals with China, tariff reductions usually apply to goods Iran doesn't export. So in these negotiations, Iran doesn't have much to lose. Energy analysts say the market really doesn't believe in a war that cuts off oil. Saudi Arabia ships about 5.5 million barrels daily through this strait. The UAE and Kuwait have similar figures. Closing the strait would be costly for everyone. Let's see which countries depend most on this strait. India imports nearly half its crude oil through this route, South Korea about 60%, and Japan nearly 74% of the oil it needs. If the strait closes, these countries' energy supply chains would collapse. U.S. gas prices rose from $2.777 on January 5th to $2.888 on February 16th, about 11 cents. It might seem small, but for an American family, it means several $100s more in annual expenses. This is exactly what Trump doesn't want to see before elections. Know this. According to the Stockholm International Peace Research Institute, Saudi Arabia's military budget is about $75 to $80 billion. Israel's $46.5 billion, including U.S. aid, and Turkey's $25 billion. In contrast, Iran's defense budget is estimated at about $9.23 billion. Yet Iran has increased its defense budget for next year by 145%. This shows the priority is the military sector. If war breaks out, LNG also suffers. Qatar is the world's largest LNG exporter, and 19% of global LNG trade passes through the Strait of Hormuz. Europe, which after cutting Russian gas has become dependent on Qatari LNG, would be in serious trouble. In this scenario, oil could spike well over $100. Colby Connolly of Energy Intelligence says there are no alternative sources for Gulf oil, especially since about 70% of OPEC Plus spare capacity sits in the Gulf. Samuel Ramani of the Royal United Services Institute warns that's going to have severe inflationary effects for the global economy. Investors in Dubai worry about tourism and finance. Saudi Arabia's massive Vision 2030 projects could also be affected. China buys about 90% of Iran's oil exports. This means Iran has become completely dependent on a single customer. Any shift in China's economy or U.S.-China relations directly impacts Iran's revenue. Well, let's conclude. What have we seen these past few weeks? Iran tested a new missile. The U.S. completed its largest military buildup. The Strait of Hormuz, through which 20% of the world's oil passes, has become the center of it all. U.S. gas prices have risen 11 cents. The U.S. military budget is $961 billion, while Iran's is about $9.2 billion. Iran sells 90% of its oil to one customer at a heavy discount, but its defense ministry has increased its budget by 145%. This shows the tensions won't end. One final takeaway. If you're an investor, these days pay attention to the energy sector and oil and gas companies. If you're just concerned about daily life, know that these tensions affect everything from gas prices to groceries. Geopolitical crises come and go, but economies adapt. We're here to cover developments. So, if you liked this, hit subscribe and turn on notifications. Thanks for watching. See you in the next video.